So that's just a quick snapshot of the survey that we've got from the Caixin PMI factory gauge, and of course surveying these factories at the smaller and private firms over in China. Let's talk to Zhiwei Zhang about this, who is the president and chief economist at Pinpoint Asset Management. What is this telling you, Zhiwei? Very good morning and happy new year to you. Given that it seems that the manufacturing side of the equation has been holding up okay, what does this survey suggest?
Happy New Year. Indeed, I think a lot of the data points are quite consistent, as you pointed out, right? So the official PMI released a couple of days earlier also had a similar pattern. I wouldn't say this is a very strong side of the data, although it's not a collapse. I think at this moment, the economy is kind of stabilized at a low level. The domestic demand hasn't really picked up, and people are waiting for more clarity from both Washington, D.C. and Beijing in terms of policies. At the same time, I think the sentiment on the ground is improving a little bit on the positive side because investors are expecting more stimulus coming from China. You know, in the past week or so, one big news is about China raising the public servant pays, right? So and the retirees pension payment. This reported by some news, not yet confirmed by the government, but you know, those kind of news help to make people more optimistic about the consumer sentiment going into the first quarter this year. So I think the people are waiting, but sentiment is getting a little bit better.
Yeah, it seems the initial sort of exuberance over the policy pivot that we saw in September has started to fade somewhat as far as investors are concerned, waiting perhaps for a bit of a rubber stamp on some of those growth targets that Reuters has been reporting about as far as their sources indicating that they are going to be looking at a bigger budget deficit and more bond issuance. I mean, how much credence are you giving to that, given that, you know, if we sort of read between the lines, we've got to keep in mind that some of that bond issuance is going to go to the bank's recapitalisation. But are you encouraged, at least by the reporting around what we might be getting from the Parliament?
Yeah, I would say I'm encouraged. I mean, incrementally, we get, you know, a bit of a good news here and there. It's not a bazooka. I think the policy reaction is really contingent on what's going to happen in the U.S., right? So everybody waiting for January 20th, and was the big news, particularly related to tariff. And I do think the government in China will respond, particularly on the fiscal side. They haven't really announced big numbers, specific numbers of, as you mentioned, right, bond issuance, exactly how much, and then how much will be going into spending rather than bank capitalization. Composition matters a lot, but I do think that they are preparing for potential shocks coming from the U.S. and probably, you know, making draft plans for to be announced in the months ahead. I think in the corporate sector, you know, entrepreneurs are already waiting for those kind of things to happen and preparing themselves as well. So in that sense, the risk to, you know, incremental news coming into the next couple of months, a lot of the bad news already been priced in. I think people are hopeful that the incremental news coming from Beijing will be on, you know, surprise on the positive side.